This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon. Happy Friday, everyone. Carol Massar, Tim Stenivek, live across Bloomberg platforms, live at Bloomberg headquarters in New York City. Tim, government shutdown.
Day 3?
Yep.
Okay.
Check, right?
Is that right?
Record high in stocks on this Friday. We've seen that, right?
S&P 500 at a record right now.
Monthly jobs report.
We'd usually be talking about that on this Friday. It is not a jobs Friday because, of course, the government is shut down, so we're not getting that data. But we are getting some data, Carol.
Yeah, we are. Listen, we are talking to folks, checking out private reports. So without that government release, as expected because of the shutdown, we are leaning on private folks and others to fill the gap, including the chief economist at LinkedIn, including Michael McKee of Bloomberg News, who caught up with the Fed governor. Fed speak matters right now. So we're going to get into that in just a moment.
Also on jobs and the impact of AI on employment, we've got the CEO of Incredible Health joining us in the studio on why it could be a good thing, an update on what she's seeing, especially when it comes to healthcare.
Plus, the old guard and new guard on Wall Street, Goldman's David Solomon on the U.S. economy, and then the firm and individual who is beating the big banks in a key metric. It makes me wonder, is Solomon looking over his shoulders when it comes to this dude? I don't know. We're going to find out in just a moment.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check on the day's trade and top business stories. Here she is, Alexis Christoforous, in for Charlie Pellet. Hey, Alexis.
Hey there, Tim and Carol. Yeah, stocks not at their best levels of the day, but we still do have a record for the Dow Jones Industrial Average. We'll see how long that lasts as once again investors shrug their shoulders at this government shutdown, which looks like it's going to last at least through the weekend. The Dow Jones Industrial Average up 289 points, but the S&P and NASDAQ have each reversed course and pulled back. The NASDAQ now down 109. Gold back near a record high, though, at 38.83. West Texas Intermediate snapping that four-day losing streak, up now 1% at 61.16 a barrel. And if you're looking at Bitcoin, it's closing in on another record high at 121,906 right now. Bloomberg reporting that BlackRock's Global Infrastructure Partners is in talks to buy privately held aligned data centers. It's a deal worth $40 billion, and it underscores surging investor interest in data centers that cater to the booming market for artificial intelligence tools. You'll remember just this week, BlackRock's GIP was said to be eyeing a potential acquisition of the power company AES. Checking that stock, it's up now better than 1%. And sticking with AI, SoundHound actually reversing an earlier gain, now down about 1.5% after gaining recognition as a leader in IDC MarketScape's assessment of conversational AI platforms. Analysts say that, along with some strong revenue momentum, has attracted renewed investor interest, at least not this moment, but the stock has been rallying. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Carol and Tim.
All right, Alexis, thank you so much. Alexis, of course, in for Charlie Pellet. Hey, normally we would be talking about this being Jobs Friday. You know, that's not the case because of the U.S. government shutdown. So we are leaning on other data points and voices for clues on the labor market, and that includes members of the Federal Reserve, including the newest member of the Fed board, Stephen Miran, who earlier joined Bloomberg TV and radio. One of the things he stressed that he may just be data dependent after all, just like Fed Chair Jay Powell.
So my view is driven by two things. Services are the more persistent and sticky part of inflation. Services are driven in large part by housing, and I expect housing inflation to come down through those channels. If something were to happen that were to tell me that that channel is invalidated, that there's some shock that's going to be pushing rents materially higher, the benign inflation forecast that I have would have to be adjusted as a result.
That's Fed Governor Stephen Miran earlier today on Bloomberg Television, also chair of President Trump's Council on Economic Advisors, on leave, though, from that job. Now Fed Governor, as we mentioned. Michael McKee, part of the team that did that interview. He's with us right now. He's Bloomberg TV and radio international economics and policy correspondent. He joins us here in the Bloomberg Businessweek studio. So we're going to talk about him being data dependent in just a second, but I want to stick on this idea of shelter as it relates to the inflationary view. What is his thesis? What is his theory that part of inflation will start to ease?
Well, the theory is that because they are removing so many undocumented aliens from the United States, it will reduce demand for housing. And that will bring down the price of housing because more houses will be available to those who are still here. It's based on a study that was done in 2003 about the Mariel boat lift in Miami, which found that there was sort of a one-to-one relationship there between removal and prices going down. A lot of economists say that's a tough thing to scale up nationwide and to say is a rule that will apply in the future. But that's his story, and that's what his belief is in terms of bringing down service price inflation and therefore overall inflation.
Well, shelter is such a tricky thing for the Fed to actually affect. And Fed Chair Jay Powell has talked about this for years, Mike. He said, given the tools that we have, we can only do so much when it comes to shelter prices. And in fact, he's talked about that being more of a policy issue in the past than it is about being part of the Fed's dual mandate.
Well, most analysts of the housing industry say that the problem for housing is that there's not enough supply, and a lot of that has to do with zoning regulations in cities. You can always build out in the suburbs. Now you have to go to the exurbs, and you start to get so far away from people's jobs that they don't want to move out there. They'd like housing in the more central areas, which means you need more density, and that's a big fight always. So that is a policy problem. The other problem is that the Fed controls short rates, and so if you are worried about mortgage rates, they're going to be much more closely tied to long treasuries like the 10-year, and that's going to be priced by the markets in what they think of inflation is going to be. So it's another reason why people are dubious about Miran's view on bringing down inflation through housing.
3 or 4 houses for sale on my block, so
really?
There's definitely some supply that I am seeing. And I remember actually a voice this week on Surveillance with Tom and Paul that they talked in the morning about, no, there is plenty of supply out there. So I'm a little confused. I want to move on to another Fed voice. Fed Reserve Vice Chair Philip Jefferson making some comments and cautioning on risks to inflation and job goals. There are Fed voices that matter more than most, and we know Jay Powell is certainly one of them. What about Mr. Jefferson?
Well, he matters in the sense that as vice chair, he's not going to dissent unless he has some horrible disagreement with Jay Powell. And so if that's where he is, that's where Powell is. And you get the same thing when you're talking about what John Williams thinks is the vice chair of the Open Market Committee. So it tells us that basically the Fed is on board with another rate cut because that's what Powell suggested at the last meeting. The question is it October or December? Most people in the markets think it'll be October, and without data, the general feeling seems to be, well, that doesn't give them a reason to change their mind. Now, it could give them a reason to wait and see what happens. But I think what we have to do is wait until we get closer to the end of the month. The meeting's on the 29th of October, and then start judging what Fed people are saying. Speaking of changing one's mind, and I do want to go back to Steve Miran for a moment. From the conversation that you had this morning with the team on Bloomberg TV and radio, is it fair to say he is kind of data dependent? Did he kind of come across that way? Well, he's data dependent to the extent that the data back up what he thinks is going to happen. He's saying that he is looking forward, which is basically more being based more on forecasts than on past data. So it's going to be hard to say he's wrong in the short term because whatever he's predicting hasn't happened yet. But his view is that the economy is going to slow, that the labor market is going to slow, and that inflation's also going to come down, and therefore you could cut rates and you should cut rates more quickly because you don't want the economy to weaken too much. But again, that's all based on forecasts as opposed to prior data.
We know that he's on leave from the job of chair of President Trump's Council of Economic Advisors. You and the team asked about input from the president. What did he tell you when it comes to not just whether or not he's had an interview to be the Fed chair, but if he's ever been asked by the president to actually take a specific policy action?
Well, he gave us the same answer that he has given other people, that he has not heard from the president since the day he was confirmed when Trump gave him a call to congratulate him, but did not ask him to do anything particular. And he says since then, he hasn't heard from Mr. Trump, and that the president has never asked him to take a particular position. On the other hand, you know, if mom told you a couple weeks ago to clean up your room and she's standing there staring at you, you kind of get the message without her having to say it. I think Carol would agree.
I think
Totally.
we can all relate to that in different ways.
Yes, yes. We did get some data. Well, you know, first I want to say, in terms of jobs data that we've gotten so far, you know, I've heard people say we're kind of flying blind without the monthly jobs data or the government shutdown and not getting government data on the U.S. economy. Are we completely flying blind, or do those private reports and the different reports, including ISM that we got today, still help form a fair picture of the U.S. economy?
They give you a sort of pointillist picture of the economy. You know, it's not sharply defined, but there's a lot of private data out there now, more and more all the time. Revelio Labs is a new one out there. They were out today saying 60,000 jobs in the month of September. The Economist survey by Bloomberg was 53,000, so they're in that ballpark. ADP was negative 32,000, so they're in a different ballpark. They're playing an away game, different ballpark altogether. But in general, you get the idea that this is what's happening in the economy. And remember that whatever the first jobs report number is, it's going to be revised, and the Fed knows that as well. So they have a lot of their own data sources that they use to try to figure out what's going on.
Well, you guys asked Governor Miran about this, whether or not the lack of data would affect the Fed's job. And he gave an interesting answer. I thought he said the Fed uses that data, but they're not making decisions each and every day. What did you make of that?
Well, the market is always moving rates around because of the latest data or the latest thing that happens to a particular company. And the Fed just every 6 weeks meets. And so they look at what all the data up to that point is. Plus, as I said, they have their own data. They get the ADP data, the raw ADP data, and they manipulate it their own ways statistically. They don't do what ADP does with the Stanford lab to come up with the numbers that we get from them. So they have their own views on what we're seeing. And as I've noted before, right now, given all the problems we've had with data coming out of the pandemic,
right,
the Fed officials are leaning much more on their conversations with CEOs and businesses about what's happening to get an idea.
Hey, 20 seconds. One other important indicator. I can't believe we didn't get to it. The Swift measure, as in Taylor Swift, new album. What do we need to know real quickly?
I found it had a good beat and I could dance to it, which is a joke I used before, and Carol got it. She's been around like me for a while. It looks like about 50-50 on the internet. You know, some people like it, some people don't like it, but it's the most streamed album ever, so it tells you that that's going to make some money, which is good for the economy. So we thank Taylor Swift.
And great for the Taylor economy as well.
Yeah.
Michael McKee, thank you so much. All right, we want to stay on the jobs report, the U.S. economy. We want to see what she and her team at LinkedIn are seeing. Let's bring in Karin Kimbrough. She's chief economist at LinkedIn out there in Sunnyvale, California. Karin, you guys have such a great vantage point. You get lots of data on LinkedIn. Tell us what you are seeing on the platform when it comes to the U.S. labor market.
Yeah, so great to be here. Thanks for having me. One of the things we're seeing right now is an incredibly sluggish labor market. Hiring is slow. In fact, by our own data, we're seeing hiring that's down last month 3.5% on the month and nearly 9% on the year. So we continue to see hiring being very anemic. I don't think we're looking at an economic recession, but we're definitely looking at a hiring recession, if you will. Hiring is weak. One of the things that we're also seeing here, not just in hiring, but also just employer demand for taking on workers is just very, very slow. And a lot of that has to do with the fact that workers aren't leaving their jobs. We see that quits by our own measures. People aren't leaving their jobs by as much as they were in the past, but they're applying to more jobs and having less success. So it's a much more competitive and tough labor market out there than it was before.
Can we go so far to say employers are still hoarding workers as well? Karin, can you guys get a feel on that as well? That's something that we've certainly seen out of the pandemic when folks were just, dying to get workers in, and it was a very tight labor force. So they have been a little bit gun shy, if you will, in this environment to kind of let folks go. Do you see signs of that?
I think so. We've been calling it job hugging. So on the one hand, we're not seeing professionals that really want to leave. They're not quitting. They're not rushing for the doors. And on the other side, the employers aren't yet sort of leveraging any kind of layoffs or reductions in force in the private sector, not to any great degree. When you look at the data that's out on JOLTS, or you look at the data that is, in our own labor market data set here at LinkedIn, we don't see elevated layoffs. So I do think employers are kind of holding on to the talent they have. They are definitely looking to refresh it where they can, but they're being very cautious about it.
LinkedIn data only goes back so far, so maybe there isn't a time when we can compare this to, Karin, in recent years, but I'm wondering if what this looks like as far as other parts of the economy or other parts of economic history. Like, is there a historical parallel you could draw as to where we are in the cycle right now?
Well, for us, that's right. We typically like to go back to around 2015, 2016 in our data. That's where we feel confident that we can say something. But when we look at the hiring rate right now, it being so slow, so much lower than even last year, 20% below the pre-pandemic levels, I would say hiring is as low as it's been since like 2013 right now. So it is a really, really kind of slumbering labor market with not a lot of movement. And I think one of the factors is that we just don't have that churn. We're not seeing people quit. We're not seeing people laid off, which is a great thing. I'm glad about that. But it means that when people don't leave their job, there's no vacancy to backfill. And so things are very slow.
I'm curious, Karin, demographic differences, industry differences, geographic differences. Any color that you can give us on that?
Demographically speaking, we definitely see that hiring is extremely punishing for those entry-level workers. So young grads who are coming out with a college degree, their hiring rate is twice as slow as everyone else's. So if I told you that on average, entry-level workers, maybe without a college degree, are running a little bit slower than the average worker, those entry-level workers with a college degree are running far, far slower.
Where are people getting jobs and where are they not getting jobs?
So people are definitely getting jobs if they work in the skilled trades. Master electrician, plumber, pipe fitter. If you're working in commercial construction, because there's a lot of activity, you think about the plants that are being built, utilities and electrical grids that are being expanded, there's a lot of demand for construction work there. There's also a lot of hiring, believe it or not, going on in the financial sector. We're seeing it in education. We're seeing it still in healthcare. So there are definitely pockets where people are getting hired. But where we're not seeing as much momentum is sometimes in that middle space of either entry-level workers in the white-collar space, or if you think about some of the tech jobs are starting to rotate away from classic coding requirements and looking for different skills. And so that's causing a change in who's getting hired in tech companies.
Some might say a Harvard trade school maybe makes sense then after all, which certainly relates to a story that we talked about earlier in the week. Karin, so great to get time with you. We look forward to maybe next month or sooner, and maybe we'll actually have a monthly jobs data to also weave into the conversation. Karin Kimbrough, chief economist at LinkedIn from Sunnyvale, California. Just do want to mention a headline crossing. 3M is said to be considering selling billions of dollars of assets from its industrials operations as it looks to carve out low-growth businesses, according to people familiar with the matter. We did see a little bump in the share price, up about 1% right now, just down a hair. I
will say Brooke Sutherland out with a great feature about 3M. We spoke to her yesterday on our program. If you missed that conversation, check it out on our podcast feed or at Bloomberg Businessweek.
More on the economy when we come back with Goldman CEO David Solomon and a company on Wall Street everybody's watching.
2:21 on Wall Street. I'm Alexis Christoforous, and it looks like a powerful earlier rally on Wall Street is losing a little bit of steam. We're now mixed as investors continue to shrug off this government shutdown. The Dow Jones Industrial Average still up 344 points, but that's actually off its best level of the day. Still record territory there for the Dow. The S&P 500 gaining about 8.5, again a record there, but the NASDAQ pulling back, now down 67 points. Gold is at a new record high, and crude oil, WTI, now at 61 a barrel, snapping a 4-day losing streak. We've got shares of Apple slightly higher, up about 0.2%. Jefferies downgraded the tech giant to underperform from hold, citing excessive iPhone hopes. Apple is also removing apps from its app store that enable users to track and report sightings of U.S. immigration and customs enforcement agents. That's after the Justice Department said the apps could put law enforcement officers at risk. And just days after Microsoft announced a series of sweeping changes to its Game Pass subscription tiers, GameStop announcing it will continue to offer the service at its original price of $19.99, defying Microsoft and its 50% price hike for Game Pass Ultimate. GameStop coming under pressure, down now more than 3.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
All right, Alexis, thank you so much. Well, big bank earnings just a little more than 1 week away. We will be picking through those releases for clues on the economy, the health of the financial sector, and so much more. We got a little glimpse of what's to come when Goldman Sachs Chairman and CEO David Solomon spoke with Bloomberg's Tom McKenzie at an event in Italy, earlier today.
The U.S. economy is in pretty good shape, and there are some very, very strong tailwinds that have really had a profound effect, and there are also some things going on that are creating headwinds and are probably leading the economy to, underperform its expectation at this time. But I'm optimistic that we're probably going to see an acceleration as we continue to head into 2026. The big structural issue that's kept the U.S. economy going so well is the U.S., and by the way, other developed economies around the world, are running very aggressive fiscal stimulus plays. Governments are spending enormously into economies in the developed world, and that keeps the economy going even when you have other headwinds.
All right, that, of course, Goldman Sachs Chairman and CEO David Solomon speaking with Bloomberg's Tom McKenzie at Italian Tech Week in Turin, Italy, earlier today. Let's get more on this, the big banks, the earnings to come, the mysterious trading billionaire, too, that's smashing records and doing better than Goldman, JP Morgan, and others, which makes me wonder if they're all looking at this dude. Hey, let's get to it. Sri Natarajan is in the house, Bloomberg News chief Wall Street correspondent. All right, Sri, first up, Goldman, like JP Morgan, Wells Fargo, among the big banks that are reporting on October 14th. So a little bit more than a week away. Anything that stood out for you from what David Solomon told Bloomberg's Tom McKenzie on the U.S. economy or other?
I have to start by saying that...
you like the spinning?
Well, I certainly like the spinning, but having followed David Solomon for the better part of a decade, or at least the last 10 years, at least his public life at Goldman Sachs since he became co-president, then the CEO, it just feels like he is in the most relaxed, engaging, non-defensive phase of his life. Those would not have been terms you would have associated with David Solomon 5 years back, 3 years back, or even 2 years back. I have to assume that the Goldman Sachs stock at $800 a share probably has a lot to do with that. When he took over, it was around 200. It was a little bit of a circuitous route to get here.
Yeah.
If we remember
there was a period, right, where we talked about his future, his tenure.
Mostly, I would say that it was the Goldman senior partner class that was constantly talking about his future, his tenure, their unhappiness with the place and the consumer banking misadventure. But to their credit, they acknowledged the mistake. David Solomon acknowledged that it wasn't working, cut his losses, and went back to focusing on the things that really work well for Goldman Sachs. And the results are there for everyone to see. This year, the stock's up 40%. It's one of the best performers in the last year, the last 3 years, the last 5 years. It is doing well, and that perhaps is playing a huge role in Mr. Solomon's outward-facing personality, but also look at the underlying commentary from him out in Italy. He talks about the banking environment. He talks about resilience in the U.S. economy. When we talk about pickup in deal-making activity, it is already running hot relative to last year, but most of that gain is coming in North America. According to our numbers, you've seen a roughly 39% year-over-year increase in deals that have been announced. When you think about mega cap deals, and this is a stat that he threw out there, David Solomon, when you think about mega cap deals that are deals bigger than $10 billion, that is Goldman's sweet spot. Those deals are up 100% year over year. And the reason it's Goldman's sweet spot is any company that's thinking about doing a big transformative deal, management would never go wrong, even if the deal goes bust. If they showed up in court or if they showed up in front of anyone trying to look into why they made such a decision, if they were to raise their hand and said, well, we hired Goldman Sachs to do it because they have the reputation of being the best in the business. And in that segment of the market that's doing so well, it obviously helps Goldman Sachs. So their investment banking performance is great. Volatile markets and generally markets heading up are good for the Goldman trading business. And in the asset management space, they're doing well. So out and out, good year for Goldman Sachs so far.
We're going to hear, as Carol mentioned, from Goldman, JP Morgan, and Wells Fargo on October 14th. Those banks and other competitors to Goldman Sachs. What is Goldman Sachs doing better or has done better? And how have they done it over the last 3 to 5 years?
The key themes in market, the things that have really worked, play to Goldman's strength, right? And they have focused their effort around their investment bank, which involves deal making and the trading businesses, and around the asset management businesses. And these are things where we talk about these trends in the market out there. The biggest players, it's the best in the business. Every business is going to sort of consolidate around the top 5 to 10 players. There might be way too many players out there, especially if you think about the asset management space, and there will be a little bit of a shakeout. Losers will have to, shut down perhaps and fade away. But for players like Goldman Sachs, Blackstone, Apollo, Carlyle, KKR, if you're thinking in the asset management space, BlackRock, they're going to continue to do well. And when you think about an improving deal-making environment and a trading environment where everyone's doing well, Goldman is always going to be part of the mix. And that's why you're seeing it reflected in the stock market as well.
All right, so we kind of teased and kidded that there might be a firm that folks like David Solomon might be watching in the financial sector. And are they? I'm not sure if they technically are on Wall Street. It's not a firm we talk about a lot, although a couple years ago we talked about it a lot in regard to crypto and Samuel Bankman-Fried. This is an incredible story that you wrote, and it's been among the most read on the Bloomberg. Tell us about the individual at Jane Street that is just kind of hitting it out of the park.
Right. For our viewers and listeners, you're obviously talking about Rob Granieri, the last remaining founder at Jane Street. Jane Street has obviously been in the news quite a bit. And you're right, about a year or two ago, this firm was really best known as being this early launch pad for Sam Bankman-Fried's career. Of course, Sam Bankman-Fried then went on to become this global crypto wonder king, now in prison. That's not really great PR for the firm. But when it comes to the plumbing of markets, and again, Jane Street is part of this core group of firms that have sprung up in the last 20 to 30 years in concert with the electronification of markets, in concert with the embrace of exchange-traded funds, the ETF market, that have been able to benefit from their expansive use of technology and technological resources in a way that they are out there outperforming the banks. And part of their reason is capital constraints for the big banks has also forced them to pull out of certain sections of the market, leaving voids where Citadel Securities and Hudson River Trading and Jane Street and the Susquehannas of the world have jumped in. But no one seems to be doing it better than Jane Street. And the numbers are quite stark. 2016,
Let's pull up the numbers for those who are watching on TV and YouTube and Bloomberg Originals. For those on radio, walk us through, Sri, because there's a chart in this story about Jane Street by the numbers, but it in particular looks at the second quarter trading revenue numbers.
Second quarter trading revenues, Jane Street, $10.1 billion. This is the first time ever that they have done better than every other major Wall Street bank and every other competitor that they have in their space. They're much better than Citadel and Hudson River Trading.
I mean, JP Morgan at $8.9 billion.
Yeah, 8.9. That is fortress America when it comes to the biggest U.S. banks. That is Jamie Dimon's bank, and they're doing better than them. That is pretty extraordinary. This has also been a rough year for Jane Street. Let's not gloss over that. The fact that they've been accused in India of goosing the world's largest options market. So they have to deal with that as well. And they're vowed to fight those claims. But while they're dealing with that, there is no denying the numbers they've been putting up. And that's why we decided to focus on the last remaining founder of that firm right now.
We're speaking with Sri Natarajan, Bloomberg News chief Wall Street correspondent. Let's talk about him, Rob Granieri. Like other billionaires, he's got just a portfolio of trophy homes. No, I'm being completely sarcastic here. In your piece, you talk about how he's not like other billionaires, Sri. How is he different?
Oh my God! And talk about a contrast and the shift just from David Solomon, the most buttoned-up, serious CEO on Wall Street. He's DJing aside, but in his day job, you go from David Solomon to this man, 53-year-old Rob Granieri, and the contrast is not just in their hairstyles, right? Rob Granieri is a man with long flowing hair. He's got, it's not your typical sharp Wall Street where it's like they see their ethos as a tech firm. You walk into that office and you'll see people in t-shirts and jeans, whether you want to call that schlubby wardrobe or whatever you want. That is the ethos at the firm. But what's interesting about Granieri is he absolutely detests the spotlight. Till earlier this year, when we had this wild story where he was facing this embarrassment of having to publicly acknowledge he was duped, get this, duped into funding a plot for a coup in Africa, in South Sudan in particular. That's when we first started even hearing about him in a meaningful way. And when you dig into the man, he's just eccentric, but in some ways wholesome and earnest, and loves to live in rental homes, does not want to buy his own homes. Is a soft-spoken libertarian. His colleagues describe him as someone with a golly-gee attitude. But whether golly-gee attitude or not, he's atop the firm that is the most lucrative trading house in the world. And just not the man that you would expect to see in that position. And yet he has done extraordinarily well, and his firm clearly has done extraordinarily well.
Does he kind of like being like the top Wall Street firm that no one's heard of, which is how someone described it? Does he like kind of being kind of unknown, if you will?
Not just likes it that way, he would prefer it that way, and he wants it that way, and that is what he would like to tell his people. Do not do anything that would appear in the newspaper.
Did he talk to you guys for this?
He did not speak to us for this story. He would not give us an interview, but that's the man that he is. He just does not want to be known, and that's fascinating. And yet you have this man who's behind a casino in Mississippi.
That's what I wanted to end on, just 20 seconds on the Scarlet Pearl.
Well, the Scarlet Pearl, fantastic name, by the way. That's where the most recent John Travolta heist movie was even shot. That is Rob Granieri's casino. Initially, he was putting in some money because he was helping out a family friend, but turns out he was conned by a former nun. So decided that, at this stage, might as well take the former nun to court, but not give up on this casino, tried to bring in other Wall Streeters, tried to bring in Carl Icahn. That did not work out, ended up pouring lots of millions of dollars into this, and now it's a thriving casino resort in D'Iberville, Mississippi. And if you ever want to see Rob Granieri dancing, you have to go down there when they give out their employee awards every year.
Sounds like a road trip for all of us. And also, I got to just say, his yearbook picture from 1990, man. He did look more buttoned up then. And I'm just going to say.
Hair was shorter.
You had to look at the hairstyle of some of his classmates from that Manhattan High yearbook in 1990.
Great stuff. Sri Natarajan, Bloomberg News Chief Wall Street correspondent. We're going to get another read on the U.S. labor market in just a moment. But as we head to a break, we are watching the floor of the U.S. Senate in the nation's capital, a vote happening to vote on a CR, a continuing resolution, which, if agreed upon, we could maybe have that U.S. government shutdown stop and the negotiations could begin once again.
Maybe. We will bring you updates as they come from Washington, D.C. This is Bloomberg.
It's 2:40 on Wall Street. I'm Alexis Christoforous. Well, 2 out of 3 ain't bad. The Dow and S&P each at record highs, but the Nasdaq has turned negative as investors wait to see how long the U.S. government shutdown will last. Historically, shutdowns have not been market-moving events. We've got the Dow Industrials up 318, as I said, in record territory. The S&P 500 up 7 at a fresh all-time high. The Nasdaq, though, down 67. Gold at a record high, and crude oil now at $60.86 the barrel. BlackRock's Global Infrastructure Partners is in talks to buy privately held Align data centers in a deal worth $40 billion. It underscores surging investor interest in data centers that cater to the booming market for artificial intelligence. Shares of BlackRock basically flat. Checking the AI trade, NVIDIA lowered today after hitting a record high in yesterday's session. We've also got AMD pulling back about 3% right now, and Broadcom is just up about 0.7%. Bloomberg is reporting that 3M is considering selling assets from its industrials operations as it looks to carve out low-growth businesses. The maker of Post-it notes and Scotch tape has been speaking with Goldman Sachs as it reviews potential divestments. No final decision has been made. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash.
All right, Alexis, thank you so much. Alexis Christoforous in there for Charlie Pellet. All right, so as you know, no monthly jobs report. We have talked about that a lot. I will point out, though, in the last monthly jobs report from the government, we did get that out last month, showed hiring in the U.S. healthcare sector looking increasingly shaky, raising a warning flag for the economy given its importance as a key driver of job growth over the last 3 years. Now, Tim, healthcare and social assistance companies added about 47,000 employees to payrolls. That was in August, and that is the last month that we have data for, according to the BLS.
Look, and we just spoke to Karin Kimbrough, a chief economist over at LinkedIn, and she said the same thing, that they're seeing some strength when it comes to some areas, including jobs like construction, jobs like electrician, master plumber, but also in the healthcare sector, still seeing hiring there.
Exactly. So let's get another view when it comes to healthcare jobs, specifically the nursing industry. Back with us is Dr. Iman Abuzeid. She's co-founder and CEO of Incredible Health. It's a career marketplace for connecting hospitals to nursing talent. So she has a good view on all of this. She is here in studio. Nice to have you here. How are you?
I'm doing well. Thank you so much for having me.
It's great to have you here. We are without the latest monthly jobs report, so we're trying to kind of read the tea leaves and talk to lots of folks. Talk to us about supply and demand for nurses in the U.S. What are you seeing?
We're still seeing a strong demand for healthcare hiring. The number of jobs in healthcare are increasing, but it's happening at a lower rate than it was before.
Why?
Most likely changes to the economy and the macroeconomic changes that we're facing as a country. So the other big reason is the Big Beautiful Bill does have Medicare and Medicaid reductions in it, which has slowed a little bit of hiring in healthcare too.
A lot of healthcare jobs, not necessarily RN, but healthcare jobs are occupied in the U.S. by people who were not born in the U.S. I don't know the data that you have on that on your platform, but I'm curious if you're seeing any of the immigration changes that we've seen during the Trump administration, during the first few months of this administration, affect the workforce on your platform.
Yeah, so 20% of healthcare workers in the U.S. were born outside of the U.S., so they do compose an important part of the healthcare workforce that's already here. To be honest, though, we're still with status quo with immigration. I mean, honestly, since 2016, there's just been a huge slowdown in the number of healthcare workers entering the country as immigrants. And a lot of that is just continues with every administration. We saw it with Biden. We're now seeing it with Trump. And so that just highlights the importance of us needing to take care of our domestic healthcare workforce.
So what's the answer in your view? If it's been slowing down at this point for close to 10 years, then what's the right way to approach this?
The best way to approach this is to keep increasing the number of healthcare workers in the U.S. by encouraging more and more Americans to go into healthcare. We also have to remove the bottlenecks in healthcare, including the nursing school shortages, the technician school shortages, and increasing the training programs that are available for Americans.
Okay, I've talked to some doctors about this, friends of mine, and they give me these numbers that are just mind-bogglingly small. Like some specialties only graduate like 3 or 4 different residents per year in some schools. And like, it's an incredibly small number. So that seems to be structural. But as you move down from actual MDs, is it easier to increase the number? Because it doesn't seem like it's easy to increase the number of doctors in this country with the way the system is structured.
That's exactly right. The way the system is currently structured it is very difficult for us as a country to increase the number of healthcare workers that we desperately need. And healthcare still remains the biggest labor shortage in the country, with the demand continuing to increase from patients getting older, but not enough healthcare workers in the system.
Wait, so cost, lack of places to educate folks, or lack of desire for people to want to do it? I mean, I know folks who are doctors, and I think, Tim, you and I talk about this a lot, who don't necessarily love it. And then there is the demographic side, where I know I've had doctors in my life for years who have recently retired, and yet we're scrambling to find new doctors. What is like the key metric that is, or cost? Like, what is it that is really preventing folks from going into the profession?
It's really just the bottlenecks we have in our system. There is a desire from Americans to become healthcare workers. It's a key way to change, your socioeconomic status. But we have bottlenecks on hiring, on educating, and on training the healthcare workers.
Why do we have bottlenecks if we need them?
Yeah, I think honestly, there's a lot of experiences that we need to continue to improve. That's a lot where Incredible Health comes in. We're actually announcing our AI agents. So what we've done is really ushered in a new era of healthcare hiring, that can be done with AI agents to really improve the experience of healthcare workers finding their dream jobs and pursuing their dream careers.
So that's on the hiring side. What about on the actual taking care of patients side and technology there? Is there a way to ease the burden on these healthcare professionals using technology?
Absolutely. Healthcare is one industry that is adopting AI technology very fast, almost as fast as other industries, which is unusual, right, in healthcare. We're seeing AI agents be used at the bedside. We're seeing AI scribes being used. So there are.
We've had experience with. Have you had a doctor with a scribe? I've had a doctor with an AI scribe.
I'm not sure if I have.
But apart from that, I mean, and that's really helpful to doctors when they're doing their notes. They probably don't have to spend as much time doing notes, and maybe they can spend more time with patients.
That's right.
But beyond that, is the technology to a place where you can trust it to make decisions that are going to lead to better outcomes for patients?
Yeah, I believe that human connection still matters in healthcare. Both the human connection, the empathy piece. I don't think the jobs are necessarily going to be replaced with AI, but AI is being used to augment and support these healthcare workers who are generally an overworked and burnt out workforce.
Do you see eventually a day, I'm going to just go there, as we continue to see like humanoids and robotics, but a combination of robots with some AI and somehow having a role when it comes to American healthcare?
Absolutely. I mean, we launched 2 AI agents, one named Gail and one named Lind. Gail is a career partner for healthcare workers, a lifelong career partner that helps them generate resumes, that helps them with interview preparation, helps them do mock interviews. And over 90% of nurses give it a thumbs up in terms of having a great experience, as well as referring it to their friends. And then also Lynn is another AI agent we have, which is a co-pilot for the hiring teams. And so Lynn is now interviewing healthcare workers and is selling them on the organization, discussing multiple jobs with them, and really sharing what's amazing about specific employers.
But what I really mean, just got about 30 seconds, the idea of an actual robot with AI and learning and in a hospital helping out.
I mean, absolutely. I mean, I think the future, that's where we're all headed, not just in healthcare, probably in other industries too.
Not for journalism.
Not for
broadcasting. Good to catch up with you. Thank you so much, and great to have you in studio.
Thank you so much for having me. Appreciate it.
Take care. Dr. Iman Abuzeid, she's co-founder, chief executive officer of Incredible Health right here in studio.
Hey, we're watching right now from Washington, D.C., procedural votes that are ongoing in the Senate to see whether or not we will have a final vote on the continuing resolution that was passed by the House. This has to do with reopening the government, Carol. We're keeping an eye on everything happening from Washington.
Yeah, basically it would provide some funding, right? That would once again allow the government to reopen and then go back to negotiations.
Well, speaking of negotiations, some stories catching my eye about the president's negotiating strategy. The president, the White House rather, announcing today that it was withholding more than $2 billion for transportation projects in Chicago, also examining ways to reduce federal funding to Portland, Oregon. It's the latest bid to use the shutdown to target political opponents in Democratic strongholds.
All right. Yep. And while all of this is happening, it's been, as you know, a very, very busy week. And right now you've got markets, potentially some records here on Wall Street as we wrap up the trading on this Friday and for the week overall. But right now you've got markets off their best levels, just about a 3-point gain on the S&P 500, down 109 points on the NASDAQ 100. When we come back, we'll check out some stocks on the move. You are listening and watching Bloomberg Businessweek Daily.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, quick check on trading for you on this Friday. Bouncing around a little bit. We're off our best and worst levels of the session. So what does that mean? Slightly higher on the S&P 500. We'll be talking about a possibility for another record here on Wall Street for the S&P. Just up about 3 points, as I mentioned. Dow's up 305, and the NASDAQ 100 in the other direction, Tim, down about 111.
The majority of industry groups are in the green today. We do see consumer discretionary, communication services, and information technology in the red, but utilities, the outperformer, healthcare outperforming as well.
All right, I'm Carol Massar along with Tim Stenovec. Let's take a look at some stocks on the move. With us is Bloomberg TV's markets correspondent Norah Mulinda in the house. Let's talk about United Health, ticker UNH. What's going on here?
Well, speaking of healthcare, we're looking at shares of United Health up about 1.8% in trading right now. But what's really in focus today is the fact that a nonprofit advocacy group, who's also a shareholder of UNH, they filed a proposal here. Essentially, they're wanting them to distinguish between the board chair versus the CEO. So currently, Stephen Hemsley, he assumes both of these positions here, but they're really calling for them to have some sort of separation here between who leads the board versus who's the CEO. So we are seeing shares kind of reacting off of this a little bit. I mean, as you think about kind of the advocacy here, activist campaign in a sense, shares up about 1.7%.
So it sounds like they're just looking for stronger leadership structure. And, remember, I feel like years ago, and maybe was it coming off the financial crisis, you definitely saw that separation from chair and CEO, thinking that there needed to be more of a kind of separation when it comes to some of the senior leaders.
And that's what's definitely being underscored here.
Okay, what's next on your radar, Norah?
Looking at USA Rare Earth here. That's ticker USAR. I mean, they've been in focus so much today. We've been recently rather, with all the stakes that the government's been taking, and that's exactly what we're kind of thinking about here. So we're looking at shares of USAR up about 14%. Rising for double-digit gains right now. This after CNBC reported the fact that the company is in close communication with the Trump administration when the company was asked whether or not it'd be open to a deal with the Trump administration. As we know, MP Materials, also its other peer, Lithium Americas, they already have established stakes here that have been agreed upon in regards to the U.S. government. We know Trump has really been having, a field day trying to kind of take stakes in some of these companies like Intel and a few others here. So that's what we're looking at right now. Definitely getting a boost here when you look at shares.
Can I just say the stock is up 50% in the past 3 trading days.
Insane.
Yeah.
Also, I did not know this, but I'm looking at USA Rare Earths because we've spoken to these folks in the past. Barbara Humpton, formerly of Siemens, who was on our program just a few weeks ago.
She was.
She's now CEO of USA Rare Earths.
Well, there you go.
That change happening just days ago.
Wow. A lot happening in the past couple of days. Shares are up 125% so far this year. They're having quite the year right now.
Hey, Barbara, call us. We need to check in with her. All right, one more. Rivian, ticker RIVN.
Yes, have been keeping eyes on automakers a lot in the past couple days here. Looking at shares of Rivian, they are in the red here, down about 1.3% in trading. And this is ticker RIVN here. They're planning to redesign a key element of the doors of its vehicles after customers really laid out concerns, particularly over safety issues involving the car doors here, specifically with its current design. And of course, we know this is just a day after the company narrowed its full year outlook specifically for EV deliveries. So lots going on here with Rivian. Shares up not very much year to date, up about 0.1% so far this year. So interesting to see what action lies ahead.
Yeah, I feel like, we're watching so closely all of these EV makers, right? It's been an interesting couple of years. We've seen them taken off, and certainly those credits from the government, the U.S. government, has certainly helped in terms of juicing their sales, but we'll see what happens.
Well, speaking of Rivian and doors, this follows news that Bloomberg reported on issues with Tesla's doors last month, and U.S. auto safety regulators have opened a defect investigation into Tesla as a result.
Right.
All right. So keeping an eye on these. Again, Rivian, as you said, little change for the year, but a little bit lower in today's session. It's actually down about 1.2%. Norah, Mulinda, thank you so much. Bloomberg TV markets correspondent. For more conversations, be sure to check out our Stock Movers podcast. They are 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
I got to tell you something. My dad has a Ford EV.
Does he love it?
He really likes it. Yeah,
I remember he had to wait. A lot. Right, he had to wait a long time for it.
But when I was last visiting my parents, I took it for a spin, and I noticed that he had this glass breaking device in the door, and I was like, "What is this?" And he said,
"In case it doesn't work,
this is how I can get out of the car. I can break glass with this instrument if I somehow need to get out of the car." Now, to be fair, he did also get one for my mom, who has an internal combustion engine vehicle.
Okay.
So just it's not just because it's an EV, but he got concerned about being able to make sure the doors can always function.
Don't you think about that? Everything's electrical.
I don't think about anything with cars.
It used to be
in New York.
I don't know. I remember the rolling down of the window.
Well, what I do know is repairing these vehicles is so expensive because everything is electrical.
Which is kind of interesting because you basically
Keith Naughton's talked a lot about that.
But you plug it in, it tells you what's wrong, right? You just read kind of the chips, and then you got to fix it.
And we're all paying for that with higher insurance premiums.
Yeah, it's just kind of the environment that we have today. All right, folks, we are getting ready to wrap up the first hour of Bloomberg Businessweek Daily. Again, just to check on trade as we get ready to end a week that had a lot of stuff coming at us. But Right now, you've got 67.22 on the S&P 500, up 7 points. We'll see whether or not we end with a record here. Dow Jones Industrial Average, a gain of 313 points, up 2/3%. NASDAQ 100, though, under some pressure.
Coming up next on Bloomberg Businessweek Daily, Leon Cooperman, the hedge fund legend, joins us. Bloomberg Businessweek Daily.